Why is your insurance bill pushing $3,000, sometimes $4,000 a year, while drivers in Europe pay half that? Did your car suddenly get more dangerous, or is something bigger going on? Today, we break down the top 7 reasons car insurance in America is so expensive in 2026 and how you can actually fight back. If you're a truck guy in Texas, a commuter in Florida, or a soccer mom running a minivan in California, you've felt it. Rates are up, way up. In 2026, the average full coverage premium in the US is over $2,500 a year. In states like California, closer to $3,500. Meanwhile, drivers in rural Idaho might pay barely $1,200. Inflation, EV repair costs, more accidents, more lawsuits. And yeah, your state laws matter a lot more than you think. Let's break it all down. The big picture. What are Americans paying in 2026? According to recent industry data, the national average is now hovering around $2,500 to $2,800 per year for full coverage. But here's how it shakes out by state. California, $3,500, Florida, $3,200, Texas, $2,900, New York, $3,400, Idaho, $1,200, Vermont, $1,300. Same country, same roads, totally different bills. Why? Let's get into the real reasons. The top 7 reasons car insurance is so expensive. Number 1, more accidents and bigger claims. The data from National Highway Traffic Safety Administration shows traffic fatalities and serious crashes remain elevated compared to pre-2020 levels. But here's the twist. It's not just more crashes, it's more expensive crashes. Even a small fender bender in 2026 can cost $8,000 to $12,000 to fix. Example, a Texas F-150 rear-ends a crossover at 15 miles per hour. 10 years ago, $3,000 repair. Today, sensors, cameras, recalibration, $10K easy. Insurance companies pay bigger bills, so premiums go up. Simple math. Number 2, repair costs are insane, especially EVs. Modern cars are rolling computers. Take a Tesla Model Y. Battery pack damage could be $15,000 to $20,000. Bumper replacement, $2,000 plus because of radar and ultrasonic sensors. And it's not just EVs. A gas guzzler pickup with adaptive cruise control has expensive front radar units. A cracked windshield on a modern SUV can cost $1,500 because it needs calibration. Labor rates are up, parts are delayed, techs need specialized training. Insurance companies are eating bigger repair bills than ever. Number 3, lawsuits and insurance fraud. America is lawsuit country. In states like Florida and New York, staged accidents and inflated medical claims are still a big issue. Soft tissue injury claims can drag on for months. Legal costs? Sky high. Some law firms actively advertise, "Been in an accident? Call us before your insurance." Guess who ultimately pays? You. Premiums rise to offset fraud and legal settlements. Number 4, state laws matter more than you think. This is huge. Some states are no-fault states. That means your insurance pays for your injuries regardless of who caused the accident. Florida and New York, no fault. That drives up medical claim payouts, which pushes rates higher. Meanwhile, states with fewer regulatory restrictions sometimes see more pricing flexibility. California tried limiting rate increases for years. Then, when insurers couldn't keep up with losses, they pulled back or raised rates sharply all at once. State policy is a major factor. Number 5, EVs and advanced tech explosion. Every new vehicle now has lane assist, blind spot monitoring, radar cruise control, 360-degree cameras. Even a basic Honda or Ford has tech that used to be luxury only. These systems reduce accidents long-term, sure, but short-term, they're expensive to repair. A minor sideswipe can destroy a sensor embedded in a bumper. That's thousands of dollars. And EV adoption is accelerating. Companies like General Motors and Ford Motor Company are pushing more electric trucks and SUVs. More batteries, more software, more cost per claim. Number 6, inflation and reinsurance costs. Insurance companies don't just insure you, they buy insurance for themselves, called reinsurance. When global catastrophe losses increase, hurricanes in Florida, wildfires in California, reinsurance prices jump. Add general inflation, medical costs up, car parts up, rental car costs up. Everything feeds into higher premiums. If insurers lose money for 2 straight years, rates spike the third year. That's what we're seeing in 2026. Number 7, demographics and driving behavior. Young drivers, expensive. Urban zip codes, expensive. High mileage commuters, expensive. If you're 19 driving a muscle car vibe Mustang in Miami, good luck. If you're 45 with a clean record driving a soccer mom van in rural Iowa, much cheaper. Insurance pricing models are insanely data-driven now. Your credit score in most states, your claim history, even how densely populated your zip code is. Two neighbors can pay completely different rates. Real-world example. A viewer from California messaged us. 2022 crossover SUV, clean record. 2024 premium, $2,400. No accidents, no tickets. Why? Zip code had higher theft rates, repair costs rose, statewide rate adjustments approved. It's not always personal, it's systemic. State comparison snapshot. Here's a simplified view. California, 3,500. Florida, 3,200. New York, 3,400. Texas, 2,900. IM, 2,100. Idaho, 1,200. Vermont, 1,300. Urban coastal states equal higher litigation and repair costs, plus population density. Rural Midwest, fewer claims, cheaper labor, lower fraud rates. Location might be the biggest factor you can't control. How to lower your insurance in 2026. All right, enough bad news. Let's talk strategy. Here's your 1 to 10 ranking of practical savings moves. 10 out of 10, compare quotes annually. Check rates with companies like Progressive Corporation and Geico. Loyalty rarely pays. 9 out of 10, bundle home and auto. Multi-policy discounts can save 10 to 20%. 8 out of 10, raise your deductible. From $500 to $1,000 can significantly cut premiums. 7 out of 10, use telematics programs. If you're a safe driver, usage-based apps can drop your rate. 6 out of 10, drop coverage strategically. Older car worth $4,000, maybe skip full collision. 5 out of 10, shop your zip code carefully. Moving across town can change your premium by hundreds. 4 out of 10, improve your credit score. In most states, it matters a lot. 3 out of 10, avoid small claims. One minor claim can spike your rate for years. 2 out of 10, take defensive driving courses. 1 out of 10, drive boring. No muscle car vibes if you want cheap insurance. Final takeaways. So why is car insurance so expensive in America in 2026? 3 key insights. Repairs cost more because cars are tech-loaded computers. Lawsuits and state laws massively affect pricing. Inflation and catastrophe losses push everything upward. It's not just greed, it's math, risk, and regulation colliding. But here's the good news. You're not powerless. Shop around, bundle smart, adjust coverage strategically. If this breakdown helped you understand your insane premium, hit that like button. Comment your state and what you're paying in 2026. I'm curious who's getting hit hardest. And subscribe for more real talk about cars, trucks, EVs, and the money side of the auto world. See you in the next one.